Mean reversion trading.
Written by Patrick MontesDeOca and Scott McDonald's, this audiobook is your guide to mastering the underlying forces that move the markets.
Mean reversion trading, the VCPMI automated algorithm for trading stocks, futures, and ETFs. Introduction. Trading in the age of AI. The human struggle in markets. Financial markets have always reflected two opposing forces: human emotion and natural law. Fear and greed push traders toward impulsive decisions, while markets themselves operate according to measurable rhythms, cycles, and geometry. For decades, the average trader relied on intuition, chart patterns, or gut instinct. But history is clear. Most traders fail not because they lack intelligence, but because they lack a repeatable framework. Without structure, discipline, and probability, the market becomes a casino. The shift from discretion to system. Today, information is abundant. Economic data, sentiment feeds, and news flows are available instantly to anyone. The edge no longer lies in having more data. The edge lies in interpreting it correctly and executing with discipline. This book introduces a structured model that integrates three timeless yet modernized tools. VCPMI, Variable Changing Price Momentum Indicator. A probability-driven mean reversion model that defines equilibrium and high-probability buy-sell zones every day, week, and month. Gann time cycles, a time-based framework showing when reversals are statistically most likely. Square of 9, a geometric spiral calculator that maps price and time into harmonic relationships. Together, these tools create a trading trinity: probability, time, and geometry. Key takeaway: the trader's edge comes from combining probability, VCPMI, timing, Gann, and symmetry, square of 9. Why mean reversion still works. Markets trend, but they also revert. No matter how fast prices move, they eventually snap back toward equilibrium. This truth is as old as speculation itself. The VCPMI formalizes mean reversion into a mathematical framework. It identifies a mean price, then calculates 4 levels around it: buy 1, buy 2, demand zones, and sell 1, sell 2, supply zones. If price extends into sell 2, probabilities favor a reversion lower. If price collapses into buy 2, probabilities favor a rebound higher. If price hovers near the mean, probabilities favor neutrality. This is no longer guessing. It is trading with probabilities quantified. Key takeaway: VCPMI defines balance, and every trade is framed as a reversion toward or away from that balance. Time is the master key. Price tells us where to act, but time tells us when. W.D. Gann built his career on the principle: when time is up, price will change. Cycles repeat across days, weeks, months, and years. 90 degrees. Quarter cycle, 180 degrees. Half cycle, 270 degrees. Three-quarter cycle, 360 degrees. Full rotation. For example, a market that bottomed on September 28th may reach a significant pivot around 90, 180, 270, and 360 days later. When VCPMI pivots align with Gann cycle dates, the probability of reversal increases dramatically. Key takeaway: Gann cycles transform probability into precision by anchoring pivots in time. The geometry of vibration. Beyond probability and time lies geometry. The square of 9 is a spiral calculator that maps numbers into degrees of a circle. Prices and dates that fall on the same angular harmonic, e.g. 45 degrees, 90 degrees, 180 degrees, tend to resonate with each other. For example, if a prior gold top occurred at $1,920, projecting forward on the square of 9 might identify $2,328 as a harmonic resistance point. If the VC, PMI, and GAN also align near that level, the trader gains a three-dimensional confirmation. Key takeaway: square of 9 harmonics uncover hidden relationships between past and future prices. The purpose of this book. This book is built to guide traders through 3 stages. Understanding, learning why markets move in cycles, waves, and harmonics. Application, using VC, PMI, GAN cycles, and square of 9 to build daily trade plans. Execution, applying the framework to real markets with discipline, templates, and risk management. By the end, you will see markets not as chaotic, but as structured systems vibrating in time, price, and probability. Trader's Checklist. Chapter 1. Markets are not random. They oscillate between equilibrium and extremes. The VC PMI provides probability levels for reversion to the mean. GAN time cycles tell you when pivots are most likely. The square of 9 adds geometric harmonics, confirming support resistance. Trading edge comes from confluence, not single signals. Discipline and probability replace emotion and guessing.
Thanks for tuning in. Check out our other videos and hit subscribe for more trading tips and strategies.